Listen up because this is big. January 15th, 2026, NASDAQ market site. Evernorth Holdings CEO Ashish Birla just went on record saying the timing couldn't be more perfect for taking his Xrp Treasury company public. Not in 5 years, not eventually. Q1 2026. We're talking weeks away from a SPAC merger that's going to put XRP directly into Wall Street's hands through a publicly traded stock. Ticker symbol XRPN. This isn't some speculative moonshot. This is institutional infrastructure getting built in real time. And Wall Street? They're not ignoring this. They can't. Because Evernorth isn't launching a passive ETF. They're building the world's largest institutional XRP Treasury. Over $1 billion in capital raised specifically to buy XRP on the open market and actively manage it for yield. This is MicroStrategy's Bitcoin playbook applied to XRP, backed by Ripple, SBI Holdings, Pantera Capital, Kraken, GSR, and Ripple co-founder Chris Larsen. These aren't retail investors throwing lunch money at a meme coin. These are institutions putting hundreds of millions of dollars behind the thesis that XRP is going to be foundational infrastructure for the next generation of finance. So let's break this down. What is Evernorth? Why does this matter? And what does it mean for XRP's price, for institutional adoption, and for anyone holding the token right now? Because if you think this is just another crypto company going public, you're missing the point entirely. This is a fundamental shift in how institutions access digital assets. Before we go deeper, let me be real with you. If you're trying to navigate this market and understand how treasury companies work, how institutional adoption affects price action, how to position yourself ahead of catalysts like this, you need more than headlines. You need frameworks. That's why I put together a comprehensive crypto course that breaks down institutional strategies, SPAC mechanics, treasury company models, ETF flows, and risk management techniques that actually work. This isn't theory. This is the exact approach I use to make decisions in this space. Links in the description. Evernorth Holdings is a digital asset treasury company. That's a specific business model. They don't mine crypto. They don't run an exchange. They don't build DeFi protocols. What they do is raise capital, buy XRP, hold it on their corporate balance sheet, and actively manage it to increase the amount of XRP per share over time. Think of it as a professionally managed XRP investment vehicle that trades like a stock. You buy shares of Evernorth through your brokerage account the same way you'd buy Apple or Tesla, and you're getting exposure to XRP without ever touching a crypto wallet, without setting up custody, without navigating compliance nightmares. And here's the kicker. Evernorth currently holds 388 million XRP tokens. That's worth approximately $812 million at current prices around $2.09. They bought those tokens at an average price of $2.44, which means they're sitting on a cost basis of about $948 million. Yes, they're currently underwater on paper by about $136 million. But here's what matters. They're not stopping. The SPAC merger with Armada Acquisition Corp. II is designed to raise over $1 billion in gross proceeds, and the majority of that capital is earmarked for one thing: buying more XRP on the open market. Let's talk structure. This is a SPAC merger. SPAC stands for Special Purpose Acquisition Company, essentially a blank check company that exists to merge with a private company and take it public. Armada Acquisition Corp. II is the SPAC. Evernorth is the private company. When the merger closes, expected in Q1 2026, pending regulatory approval and shareholder votes, the combined entity will list on NASDAQ under the ticker XRPN. The deal is being advised by Citigroup Global Markets, Cohen & Company, and Northland Securities. Legal counsel includes Davis Polk, Skadden, and Wilson Sonsini. These are heavyweight firms. The funding is serious. SBI Holdings, one of Japan's largest financial services firms with deep ties to Ripple and XRP, is committing $200 million as the anchor investment. On top of that, you've got Ripple providing capital, along with Pantera Capital, Kraken, GSR, and individual investors including Ripple co-founder Chris Larsen. This is a who's who of institutional crypto. These are firms that don't throw money at projects unless they see long-term infrastructure value. Now, let's talk about what makes Evernorth different from an ETF. XRP ETFs launched in late 2025, and they've been wildly successful. By January 2026, XRP ETFs had accumulated over $1.4 billion in inflows, with 43 consecutive days of positive flows and 0 outflows. That's better than Bitcoin and Ethereum ETF launches over the same period. So why do we need Evernorth if ETFs already exist and are working? Because ETFs are passive. They track the price. Evernorth is active. Evernorth isn't just holding XRP in cold storage. They're using it. Institutional lending, lending XRP to market makers and institutional traders who need to borrow tokens. Liquidity provisioning, deploying XRP into liquidity pools on the XRP ledger's decentralized exchange and earning trading fees. DeFi yield strategies, staking XRP in DeFi protocols. Validator participation, running validators on the XRP ledger and earning network fees. They're taking that XRP and putting it to work to generate additional returns, which get reinvested into buying more XRP. The goal isn't just to track XRP's price. The goal is to increase XRP per share over time through active treasury management. Ashish Birla spelled this out clearly in his NASDAQ interview. He said, "You have to have scale. Evernorth is by far the largest XRP digital asset treasury out there. They can't be passive. They have to be active stewards of helping the ecosystem flourish and develop." That's the pitch. They're not just passengers in the XRP ecosystem. They're participants. They're validators. They're liquidity providers. They're generating yield and using those proceeds to buy more tokens. This is MicroStrategy's model applied to XRP. Let's talk about MicroStrategy because the comparison is unavoidable. In August 2020, Michael Saylor announced that MicroStrategy would start buying Bitcoin as a treasury reserve asset. At the time, people thought he was insane. Corporate treasuries are supposed to hold cash and short-term bonds, not volatile crypto assets. But Saylor saw Bitcoin as superior to cash. As of January 2026, MicroStrategy holds 673,783 Bitcoin worth approximately $63 billion. That's more than 3% of Bitcoin's total 21 million supply. Their average purchase price is $75,026 per Bitcoin, which means they're sitting on over $12 billion in unrealized gains. MicroStrategy's stock price went from under $200 in 2020 to over $1,500 at its peak in 2024. That's a 7x return. Not because their software business improved, because they put Bitcoin on their balance sheet and executed a relentless accumulation strategy. Now Evernorth is doing the exact same thing with XRP. They're building a publicly traded company whose primary asset is XRP. Institutions that can't or won't buy XRP directly due to custody concerns, compliance issues, or internal risk policies can simply buy XRPN stock. You want XRP exposure? Buy XRPN. You get liquid, transparent, regulated access to XRP through a publicly traded equity. No wallets, no seed phrases, no worrying about exchange hacks or losing your private keys. Just stock ownership through your existing brokerage account. And here's why that matters for XRP's price. When Evernorth raises $1 billion and deploys that capital into open market XRP purchases, that's buying pressure. That's sustained institutional scale demand hitting the market. And unlike retail traders who panic sell during dips or take profits during pumps, Evernorth isn't selling. Their business model depends on holding XRP long-term and growing the treasury over time. This creates a persistent bid in the market. Every quarter, Evernorth will have capital to deploy. Every quarter, they'll be buying XRP. That's their stated strategy. Birla's background matters here. He spent years at Ripple as a senior executive, helping scale RippleNet's cross-border payments business to process over $1 trillion in annual transaction volume. He knows the XRP ecosystem inside and out, and now he's stepping down from Ripple's board to run Evernorth full-time. Ripple CEO Brad Garlinghouse, Chief Legal Officer Stuart Alderoty, and Chief Technology Officer David Schwartz are all expected to serve in advisory capacities to Evernorth. And here's what's crucial. Evernorth will file regular reports with the SEC. Their balance sheet, their XRP holdings, their treasury policy, their yield strategies, it's all going to be public information. When you buy XRPN stock, you can read Evernorth's quarterly earnings reports, see exactly how many tokens they hold, track their cost basis, monitor their yield generation, and evaluate their performance. That's the kind of institutional-grade transparency that brings in serious capital. Evernorth has been accumulating XRP for months. According to on-chain data, they've accumulated over 388 million XRP. Notably, over 338 million XRP were transferred by Ripple as part of the strategic backing. In November 2025, Evernorth announced they had purchased an additional 84.36 million XRP at an average price of $2.54, using $214 million in cash proceeds. That brought their total XRP purchased and committed to over 473 million tokens. These aren't small buys. These are institutional-scale accumulation events that move markets. Why does that matter? Because exchange balances are a critical supply metric. When XRP moves off exchanges into cold storage or corporate treasuries, that's supply leaving the liquid market. Exchange balances for XRP have dropped 57% over 2025, from 3.76 billion tokens to 1.6 billion. That's 2.16 billion XRP coming off exchanges. Evernorth's 388 million tokens represent 18% of that outflow. They're a major contributor to supply tightening. And once the SPAC closes and they deploy another $1 billion into open market purchases, that supply pressure intensifies significantly. Now let's talk about the timing. Birla said on NASDAQ that the timing couldn't be more perfect. Why? 3 reasons. First, regulation. The SEC lawsuit against Ripple ended with a settlement in August 2025. XRP was ruled not a security in secondary market sales. That removed the biggest regulatory overhang the token has faced for 4 years. Second, the Clarity Act. Even though it's currently delayed in the Senate, the bill, if passed, would classify XRP as a non-ancillary asset with the same legal status as Bitcoin and Ethereum. Third, institutional demand. XRP ETFs have seen record inflows, over $1.4 billion in 50 days. That's proof of concept that institutions want XRP exposure. Evernorth is capitalizing on that demand by offering an actively managed treasury vehicle. The macro environment is also favorable. Trump administration is pro-crypto. David Sachs, the White House crypto czar, is actively pushing for digital asset legislation. The regulatory environment is the most favorable it's been in crypto's history, and Birla is smart enough to strike while the iron is hot. If you wait another year, the political landscape could shift. The 2026 midterms could change the balance of power in Congress. But if you go public now, you lock in that favorable environment before the window closes. Let's talk about yield generation. Birla said, "We'll be generating yield as well on the XRP asset. We'll use it to go and buy more of the digital asset for the treasury." How? Institutional lending. They lend XRP to market makers and hedge funds who need to borrow tokens, charging interest. Liquidity provisioning on decentralized exchanges. They deploy XRP into liquidity pools and earn trading fees. Validator participation. They run validators and earn network fees. DeFi yield. They stake XRP in protocols offering yield. All of these strategies generate returns denominated in XRP, which get added to the treasury. Over time, that compounds. XRP per share increases not just from price appreciation, but from yield accumulation. This is critical to understand. When you buy shares of an XRP ETF, your returns are purely driven by XRP's price. If XRP goes from $2 to $4, your ETF doubles. That's it. But when you buy shares of Evernorth, your returns come from 2 sources: XRP's price appreciation plus the increase in XRP per share from yield generation. If Evernorth generates 5% annual yield on their holdings and reinvests that, shareholders benefit from both price movement and treasury growth. That's a superior model if executed correctly. Now, let's address the elephant in the room. Evernorth is currently sitting on an unrealized loss. They hold 388 million XRP worth $812 million, but their cost basis is $948 million because they bought at an average price of $2.44. XRP is currently trading around $2.09, so they're underwater by about $136 million on paper. Does that matter? Not really. Why? Because they're not selling. Their business model is long-term accumulation, not short-term trading. MicroStrategy went through the exact same thing. In March 2020, when Bitcoin crashed to $3,800, MicroStrategy had massive unrealized losses. Saylor didn't panic. He didn't sell. He bought more. And over the next 4 years, Bitcoin went to $109,000, and MicroStrategy's holdings became worth tens of billions of dollars. Evernorth is playing the same game. They're thinking in years and decades, not weeks and months. Let's talk about what this means for XRP's price specifically. When the SPAC merger closes and Evernorth starts trading on NASDAQ, that creates a new demand channel. Institutions that wouldn't or couldn't buy XRP directly can now buy XRPN stock. Pension funds, endowments, family offices, asset managers. These are pools of capital measured in the billions and trillions. They can't buy XRP on Kraken or Binance. Their compliance departments won't allow it. But they can buy a NASDAQ-listed stock. That's permitted. That's familiar. So Evernorth opens the door to institutional capital that was previously locked out of XRP. And here's the compounding effect. As XRPN stock performs well, driven by XRP price appreciation and treasury growth, it attracts more institutional investors. More capital flows into Evernorth through stock purchases. Evernorth uses that capital to buy more XRP on the open market. That buying pressure pushes XRP's price higher. Higher XRP price makes XRPN stock more attractive. More investors buy XRPN. More capital flows in. More XRP gets purchased. This is a self-reinforcing cycle. It's the same flywheel that drove Bitcoin's institutional adoption through MicroStrategy. Birla emphasized scale. He said, "You have to have scale. Evernorth is by far the largest XRP digital asset treasury out there." Why does scale matter? It gives you market power. If you control a large enough position, you can participate meaningfully in governance and ecosystem development. And it gives you operational efficiency. The cost of running a treasury operation doesn't scale linearly with assets under management. Once you build the infrastructure to manage $100 million in XRP, adding another $900 million becomes marginal. That's why bigger treasuries have better economics. 2026 is shaping up to be the year of crypto IPOs. Kraken filed a confidential S-1 with the SEC in November 2025, targeting first half 2026 listing. Ledger is reportedly planning a $4 billion New York IPO. Consensus is in talks for a 2026 public listing at $7 billion valuation. Circle went public in 2025. Gemini went public. BitGo raised over $212 million on its NYSE listing. This is an industry-wide shift. Crypto is moving from shadowy offshore exchanges to regulated, publicly traded companies. Evernorth is riding that wave with a pure-play XRP exposure vehicle. Why is this happening now? Regulatory clarity. The Trump administration is crypto-friendly. The SEC under Gary Gensler was hostile, bringing enforcement actions against exchanges and protocols. Gensler stepped down. The new regulatory environment is favorable. Congress is working on digital asset legislation. The U.S. is positioning itself as the global leader in crypto innovation, and companies are capitalizing on that momentum by going public while the regulatory window is open. Let's talk about the risks. First, XRP price volatility. If XRP crashes, Evernorth's stock will crash too. Their entire business model is tied to XRP's value. Second, regulatory risk. Even though the SEC lawsuit is settled, future regulatory actions could impact XRP or Evernorth. Third, SPAC execution risk. Shareholder redemptions could reduce the capital Evernorth actually receives. Fourth, competition. Others could emerge. But here's the counter-argument. The risks are manageable if you have conviction in the thesis. The thesis is simple. XRP is foundational infrastructure for global payments and finance. Ripple has built RippleNet into a network that processes over $1 trillion in annual transaction volume. ODL, on-demand liquidity using XRP, is expanding with 32% year-over-year growth. RLUSD, Ripple's stablecoin, is gaining traction with institutional users including BlackRock, which confirmed in January 2026 that they're using RLUSD as collateral. Ripple has a conditional federal bank charter from the OCC. The SEC lawsuit is over. XRP ETFs are seeing record inflows. If you believe all of that, then Evernorth is a leveraged bet on XRP's success. When Armada Acquisition Corp. II announced the ticker change to XRPN in October 2025, XRP's price surged 8.6%. When Evernorth announced they had accumulated over 388 million XRP in January 2026, the market took notice. Whale wallets holding over 1 million XRP are at an all-time high, 2,700 wallets. Large transactions over $100,000 hit 2,802 in a single day in early January, the highest level in 3 months. Institutional money is moving into XRP. Bitwise CIO Matt Hogan weighed in. XRP is still figuring out its product-market fit. How it executes in 2026 will determine whether this becomes one of the most successful ETF launches in the market or whether that demand fizzles out. That's the critical question. XRP has the technology, partnerships, regulatory clarity, and institutional interest. But does it have sustainable, real-world demand? Can RippleNet and ODL continue scaling? Can RLUSD gain market share? These questions will determine XRP's trajectory, and Evernorth's success is directly tied to those outcomes. For investors, you have multiple exposure options. Buy XRP directly for pure price exposure with full custody control, but you manage security and compliance yourself. Buy an XRP ETF for passive spot exposure through a regulated product with no custody hassle, but you pay management fees and don't get yield generation. Or buy XRPN for actively managed exposure with yield accumulation and professional treasury management, but you're taking company-specific risk. There's no universally right answer. It depends on your risk tolerance, investment time horizon, and conviction level. On January 21, 2026, Evernorth announced a strategic collaboration with T54 Labs, an AI-powered autonomous treasury operations platform. The partnership will deploy AI agents to execute treasury strategies, manage liquidity positions, and respond to market conditions in real time with built-in risk checks. When you're managing billions of dollars across multiple protocols, you need automation. You need systems that can monitor risk 24/7, execute trades at optimal times, rebalance positions automatically, and respond to volatility without human intervention. Evernorth is building that infrastructure from day one. Michael Saylor has been defending the Bitcoin treasury model aggressively. In January 2026, on the What Bitcoin Did podcast, when questioned about whether the market can handle 200-plus treasury companies buying Bitcoin, Saylor called it an ignorant and offensive statement. He argued that questioning whether companies should adopt Bitcoin is like questioning whether they should adopt electricity. As of January 2026, there are now 192 public companies holding Bitcoin on their balance sheets, up from 0 in 2020. Evernorth is applying that exact thesis to XRP. What to watch going forward? First, the SPAC merger closing. Target is Q1 2026. When it closes, XRPN starts trading on NASDAQ and Evernorth begins deploying capital. Second, redemption rates. Armada shareholders can redeem shares for cash. SPAC deals average 60 to 80% redemptions in 2025. Low redemptions signal institutional confidence. Third, XRP's price action. If XRP breaks above $2.50 and holds, that validates Evernorth's cost basis. Fourth, quarterly disclosures after going public. If XRP per share is increasing through yield generation, that's proof the active model works. Fifth, watch for competing treasuries. If Evernorth succeeds, copycats will emerge. Sixth, regulatory developments. The Clarity Act would be a massive tailwind. Seventh, watch Ripple's execution on RippleNet, ODL, and RLUSD adoption. All right, let's wrap this up. Evernorth Holdings is going public through a SPAC merger, targeting Q1 2026 NASDAQ listing under ticker XRPN. They're raising over $1 billion to build the world's largest institutional XRP treasury. They currently hold 388 million XRP, worth $812 million. They're backed by Ripple, SBI Holdings with a $200 million anchor commitment, Pantera Capital, Kraken, GSR, and Chris Larsen. They're not a passive holder. They're actively managing the treasury through institutional lending, liquidity provisioning, validator participation, and DeFi yield strategies. They're using AI-powered systems through their T54 Labs partnership. And they're creating a regulated, liquid, transparent way for institutions to get XRP exposure. This is institutional infrastructure being built in real time. This is Wall Street getting direct access to XRP through a familiar product, publicly traded stock. For anyone holding XRP right now, Evernorth represents sustained institutional buying pressure. Over $1 billion in capital coming into the market to buy tokens on the open market. That's supply leaving exchanges and moving into corporate treasuries. That's long-term accumulation from professional investors with multi-year time horizons. That's a structural shift in XRP's supply dynamics happening right now. If you want frameworks for analyzing treasury companies, reading SPAC filings, interpreting institutional strategies, and positioning ahead of catalysts like this, check out the crypto course I've built. We cover regulatory analysis, institutional adoption, treasury models, ETF flows, on-chain metrics, and portfolio construction. Links in the description. Stay ready, stay liquid.